What's going on, everybody? Jake from StratGeeks coming at you once again, and this is part 2 of the video that I made the other day. Not exactly sure why it's a part 2, but I don't know. Call it a part 2. I think I wanted to go over some more detail in regards to the Axios indicator that plots the little red and green arrows on our chart. Here are the latest full automated results for Axios with 4 contracts. We're using a 200 EMA and a 20 EMA and a super trend of like 6.3 or something. But I wanted to get over 100 trades and just see how high I could get the profits, along with the drawdown, like almost up to 1,000. So it's crazy. 60 days, almost 14 grand, and the drawdown 834. So that's absolutely insane. Over 100 trade sample size, of course. We got 140 trades. What I really like is that the long and short trades are pretty balanced, which is really nice. Anyway, yeah, so I don't need to go over too much of the automation. I want to focus on the Axios arrows. Real quick, before we move on to the arrows, I do want to show the other strategy that we have called ORS. Has just been absolutely crushing it lately. This is yesterday, and we're using 2 contracts right now on the template. So each one of these trades is each tick with 2 contracts is basically $1. So $600 something trade last night, or I'm in Bali, so last night, I mean yesterday. And the second trade right around 150 or so. Bunch of good days this week though with ORS. Yesterday was really good. 1 trade yesterday. That was 2 contracts, about 154. It's not a huge day, but it's okay. And then Monday was about 500 plus pretty much a break even. So 500, 150, and what, 600, 675, something like that. Oh, 750 almost. But look at the last, what do I have loaded on the chart here? Got 60 days loaded. We'll load up 90 as well though, so let's see what 60 days loaded looks like. 2 contracts. And the backtest to live is extremely accurate with Axios and with ORS because we use one of the best master developers for NinjaTrader out there in the world, literally in the world, spare no expense. So yeah, so 60 days, still keeping that drawdown under 1,000, which I really like, somewhere around 1,000, and we're at 12,500, 3.56 profit factor. I've never seen ORS that high. Now we don't quite have 100 trade sample size, so let's increase this to 90 days to get that over 100. And we'll still see some really nice results here with ORS. And then we'll get into the Axios arrows. Shoot me a DM on Discord, and I can send this over to you for free. This is my fib tool that I made. I can send you over the file for this. Anyway, with 90 days, we have, man, it's one of the best ORS templates that I've ever come up with. $16,000, almost $16,500 drawdown, still about $1,000 only. Over 100 trade sample size, almost a 66% win rate, and then The average winner is bigger than the average loser, so $300 average winner versus a $200 average loser. The largest winning trade isn't even that big. The largest losing trade really isn't that big. So we got a nice balance here, really nice balance between longs and shorts, which tells me that it works in range, it works in uptrend, it works in downtrend. We've definitely had a lot of samples of all of that over the last 90 days. And just look what the equity curve looks like. And again, super accurate backtests. I cannot stress how using limit orders makes all the difference. And it's not just the limit orders. We don't use any trailing stops or break-evens in any of our backtests, or I don't personally use them in my live trading either. But we do have the capability, if you wanted to set up live trading with auto trails and break-evens, we have that available in the parameters of the strategy, absolutely. But just look at the days. This is one of my favorite things to look at right now, is these, or like the amount of profits with 2 micros per day for ORS. I mean, almost all these days, you could be within the max consistency rules for 50K prop firm accounts, most of them. You can either just set your Rhythmic or your Tradeovate to just stop after, what is it, 750, 800. It all depends, but I like to cap my wins at about $700 to $800 for the day. So I might not have been able to get this last 200 with PA accounts. With evals, I mean, shoot, you could go higher than that. But yeah, I mean, yeah, I've been showing this a lot lately. So let's get into the Axios arrows. And again, shoot me a DM on Discord if you want. I got another cool tool I can show you too. So I can send you this thing, this SD line. You can basically make any chart into a grid. And I also have this thing I can send you too if you want. It's this pretty cool little risk-reward thing that I made based out of a fib tool. And then you can put extra targets and whatever on it too. Anyway, let me show you how to get in contact with me. You can go to our website here at StratGeeks.ai. And then StratGeeks.ai, and then just scroll down and you'll see this giant red button right here. Just click on that. That'll get you directed to our Discord server. And then you can just shoot me a message. I'm Jake at ORS, and I'll send you those files. And let me know, because right now we have an amazing sale going on for ORS and Axios as package deals. And then, yeah, send me the code word Bali Dog with a capital B. Bali. I live in Bali, so I was just thinking Bali Dog. That sounds like a fun thing. Send me the code word Bali Dog, and I'll send you the link to the Axios and ORS sale price, which is way better. I mean, I was going to talk about this too as part of part two. The pricing that we offer is just like, it's what I would want if I was looking for automation. First of all, it's hard enough to find automation out there for NinjaTrader. Secondly, it's hard to find automation where they actually explain how the trades work, which I do in multiple of my videos. I'm even going to show you some manual stuff here in a second with Axios. Axios really lends itself quite nicely to a lot of manual ideas that I have that eventually will get programmed. Hopefully, I'm going to get a quote from the developer here probably pretty soon. But yeah, I mean, so many companies out there sell stuff and they don't show you how it works. If they do show you a backtest, if they even do, it's for like, I've seen ones for like 12 trades, and then they're going back a year or two for like 13 trades or something. Like, dude, your backtest isn't going to be accurate a year or two on NinjaTrader. You're lucky if your backtest is accurate 30, 60, 90, 180 days, let alone 2 years. Anyway, and then they're doing like trail stops and auto break evens, and they're not telling people. And I've just heard the last 3 guys that signed up, they were coming from, see, I don't want to name any of these companies, but they were coming from this other company. I actually had meetings, Zoom meetings with each of them, helping them set everything up. It's part of the sale price right now. But they were coming from companies that, I don't even know what it was. They're charging thousands and thousands of dollars a month to like join their Discord. Our Discord's free. We don't really do much on Discord. It's just a way for me to direct message our customers with templates and stuff. But yeah, and then like they don't even show, if they do show the back test, it's not accurate to the live results. It's crazy. It's just insane out there in this marketplace. So I designed strategies, and my partner and I designed a website and pricing structure that, like, if I was looking for automation, this is what I would want. I mean, our website is super clear. It's not, just for a second. Okay. Anybody who has looked for automated strategies for NinjaTrader, you will see how clean our website is. It's just like, bam, there's Axios, there's OS, basically show you how it works right here. These are actual results that I pulled the other day. I think they're actually even better now. Then we go to describe a couple things, but it's real simple. That's it. That's the whole first page. That's it. And then if you want to go and see what the pricing is, you just go to see what the pricing is. You better message me first, and then we got to set up a Zoom meeting and have a sales call. And there's nowhere on a lot of these websites where like you even see the pricing. They just like hide the pricing. So we do have Axios and OS separately as a 1 month. I like to see people sign up for more than 1 month, so we get a much better deal on 3 months, because sometimes the first month running the strategy, it might not be that great. It could be a flat month when you first start out, but over the course of 2, 3, 4, 5 months, there's a lot better, higher probability that you're going to see the strategy really start to shine. Right now, these are our sale prices. We put the code word in, Bali Dog, here, or send it to me and I can send you the link or whatever. But yeah, you can just go to our website and you can see, I don't want to talk too much about the pricing or whatever, but right now it's on sale for like even individually or a combo deal. Like it's basically 2-for-1 combo deals on all the. We even have a lifetime subscription. Somebody bought a 6 month the other day, or a year. No, somebody bought a lifetime the other day. So we got more options, and it's just super clear. Like if you wanted to just see ORS here, you click on it. Shows you the actual results. Our results are actually even better now. You can click on this little thing here. You can actually look at stuff. I actually should update this but yeah, almost 100 trade sample size here. This is actually even work. I update this. It's even better now than it was. And you can actually see what's going on. It actually explains what's happening, what's included. Like it's not complicated. That's it. That's literally it. And then same thing with Axios. We only have 2 products. We're gonna be releasing some more strategies hopefully soon, and then updating Axios. But yeah, and then if you look at Axios, it's just here. Sorry, I feel like I'm spending too much time on this, but it's like it kind of shows you how it works. That's it. That's not much writing. You should see some of these other websites. It's kind of crazy. And that's it. That's literally it. That's our whole website. There's really not much on that page and that page, but it's really just that and that. Anyway, shoot me a message on Discord. I'll send you the links or whatever, and the discount code and stuff like that. But yeah, that's enough of that. Okay, so let's get into it. So let's talk about these Axios. Oh, I need to go keep that up actually. So I had ChatGPT. I explained our Axios indicator, and I had ChatGPT help me as far as trying to explain the formula behind these red and green arrows. Let me find a little bit of a clearer spot here. So, excuse me, these red arrows, these green arrows, this is the formula over here. So the base component, here's the formula if you want to check that out. But we basically start by taking the price and running it through whatever average method that you select. So we have a bunch of different averaging methods, a weighted moving average, an EMA, an SMA, an HMA, a TEMA, a bunch of different averaging methods. And I'll show you that real quick here in the strategy settings. So yeah, this is the Axios. These settings here, these entry settings, well, not all of them, but yeah, from Axios smoothing, averaging, Axios factor, and the other averaging method. These are the driving engine behind the strategy. Everything else is just really a filter. So this is what creates the red and green arrows. So the base component would be the, yeah, so we have them all labeled as averaging method here. So it's the first one. Anyway, so let's get rid of that real quick. So we start by taking the price and running it through whatever averaging method you've selected, which is one of those moving averages. Then this creates the raw momentum foundation that Axios is built on. Think of this as the heartbeat of the price movement, and everything else stacks on top of this first component or parameter. Then we have the smoothing layer. There's the formula. So Axios then takes that base momentum and smooths it again using a second moving average like a Hull or EMA. So we can choose a different moving average for the smoothing layer, if you will. And this step is really cool. And I think we have Hull selected here. We have Hull on one of them, on the last one. Yeah, I really like Hull being the last one because Hull really is good at predictive almost pricing. It's barely even a lagging indicator as far as I'm concerned, but the TEMA is the second one. So this takes the base momentum and smooths it again using that second method. In this case, our arrows are by Hull. This step removes the noise and creates that signature smooth responsive Axios curve, which you can't really see. It's kind of in the background. And it reacts fast, but without the choppiness that you get from normal oscillators. But then here's where it really gets cool, number 3. The momentum volatility engine. Actually, the next two are really cool. So here's where Axios becomes very different from standard indicators. This is our proprietary kind of deal that we've designed here. Instead of measuring volatility from price, Axios measures the volatility from momentum itself. So in the combining of step 1 and 2, basically, those two moving averages. So we look at how much the smooth momentum changes from bar to bar, take the absolute difference, then smooth that using, here's the best part, then smooth that using the ATR averaging method you've selected, like TEMA or like another moving average uses that ATR, the momentum ATR, the price difference of the momentum moving averages. So this gives Axios a self-adjusting volatility measurement that expands fast. It expands during fast markets and contracts during slow ones. And that is here, the 1.5, the Axios factor. That's what I call the Axios factor. You can kind of think of this as like an ATR multiplier of the momentum itself. I know this is kind of complicated and a little strange. It's not a normal. This number 4 is also kind of considered the Axios factor. Actually, I guess number 4 is the Axios factor, depending on how you look at it. Yeah, the rails. Yeah, so the volatility engine is I guess the third. Yeah, it's the third, the averaging method here. We should probably have this labeled a little bit different, but that's the third one there. The Axios bands, that's the Axios factor, so that's the 1.5 there, sorry. So these are the Axios rails. So the dynamic bands that widen as momentum volatility increases and tighten, this is all happening behind the scenes, and then tighten when the market goes quiet or it's more choppy or it's the thinner volatility. The Axios factor determines how aggressive and conservative those bands are, basically how fast the red and green arrows are going to flip, and how close together that they're going to flip as far as time. These bands prevent false signals and make the indicator adaptive instead of static. Now, you watch these red and green arrows enough, you will see. And then finally, long and short logic. This is kind of just explains the I guess, final, like the cover sheet, I guess, is, if you will. This is where the actual signals come from. A long signal prints when the smooth momentum line pushes up through the lower band. A short signal prints when the momentum line drops down through the upper band. So that's here. It's plotted as very simply. It could look a lot more complicated than this. Oh, yeah, I have this other indicator on there, so I'll show you that in a second. But you can see here, we cross down right here. So then we get our red arrow. We cross up right here. So then we get our green arrow. And then we cross down. We get our red arrow here, and so on. So this crossover gives you objective, that's the key word there, objective binary entries that don't require interpretation or guesswork. So when I go over these manual trades, and I'm going to go over in the last couple of days, there's no question of if it's a long entry or a short entry. So objective binary entries that don't require interpretation or guesswork. Axios simply fires clean signals based on the relationship between momentum and volatility. So that's it right there. That's the main thing. Axios, these red and green arrows are firing based on the relationship between momentum and volatility. Let's see what it says for the summary. So the entire Axios process works like this. Builds a momentum line using the chosen averaging method, then smooths it again to remove the noise, measures the volatility of that momentum, then builds adaptive bands around that momentum, kind of like a, what would it be like? Almost like an upper ATR band and a lower ATR band, like a, what's the thing I'm thinking of? Let me pause here in a second. Yeah, kind of like a Donchian channel, if I'm saying that right. So you'd have like a band up here and a band down here when they cross over. So yeah, then it builds adaptive bands around it, then finally it generates a long or short entry when momentum breaks through those rails. This is why Axios behaves so consistently and why it pairs so well with automation. The logic is stable, self-adjusting, and extremely clean. So yeah, let's go ahead and look at that. So speaking of clean, I've made a few videos on the manual trade ideas that we're going to eventually get some of these programmed in. But this one I want to make it look a little bit simpler. So I'm actually going to remove the automation for this video and just plot the red and green arrows. So we were thinking about maybe offering this separately as an indicator. I don't know yet. We got some ideas. But this is, we call this pulse. But these are the Axios signal. This is the Axios signal generation generator lines here. So I have the set pulse here, the pulse indicator set for the exact same settings that the Axios strategy has. So, I mean, so basically, like when you look at the results for the last, actually, let's change this to just 2 contracts and see what 2 contracts gets us in the last 60 days. So 2 contracts, that means each tick is worth $1. Let's drag this in. So just 2 contracts in the last 60 days, 7,200 with a drawdown of just barely over $550. Absolutely amazing. Over 100 trade sample size, almost 150. So we can take this and then also kind of layer in or think about all the manual trades, and I'm going to go over a few of them right now. I'm going to try to make it simple and clean too, because I've actually done us a favor and written them down here for us. Axios manual methods: Mean Reversion A, Mean Reversion B, Mean Reversion C, and an Axios continuation. So let me see if we can find, we'll just go through a few of them here. First, let's clean up the chart so it's easier to explain. So let's remove the automation. And now we're left with a 9 EMA and a 120 EMA. And these are going to be used for entry filters and targets, actually. Our stop is always 300 ticks, no matter what. And if we're in a long, like if we were in a long here, and then we didn't hit our target, we'll go over the targets here in a second, and we didn't hit our target, then we have to exit that long on the next candle on the opposite signal. So this one would be here to here, and then $86. So we're just going to 2 contracts, each tick is $1. And our stop is always 300 ticks away. Like, just for context, 300 ticks on this day is probably right around in here. Oh, geez, I almost got it. So 300 ticks is like right about there. So it's a fairly wide stop. So noting that it's a fairly wide stop, well, not too wide. For the 3 minute MNQ, it's like pretty okay actually. So we can squeeze this down a little bit even. And once you get used to watching these red and green lines in real time, you'll start to know and be ready. Like, oh, I bet you this next bar could close a green candle. We better get ready. But with time, you'll definitely be able to get it. So let's go over, let's see. Oh, and another thing for people who, yeah, so I added Axios. Let me just re-engage the automation one more time here. So Axios plots the swing. Here's a swing high, right? But if you can look real closely here, Axios plots from here to here as that swing high. So what I did is I added NinjaTrader's native swing indicator just so we can connect these dots right here. And that looks like this. Indicators. NinjaTrader swing here. And I have it set to, oh no, this is the swing indicator for Axios. And then swing native to NinjaTrader indicators is here. I have it set to a strength 5, which is the same as what Axios is. And then I just made the colors blue, hash, and a width of 2. But let's make sure we save this as a default. But here's what it looks like without. And actually, I think I'm going to start using this in my everyday trading. It looks a little weird the way it plots. It's just like a couple ticks off here just because they're different indicators, but it's basically the same. So we remove this so you can see what I'm talking about. So keep your eye right here. You'll notice that there becomes a gap here in the swing. Oh, I didn't remove it. Oh, yeah, I did. Yep, there it goes. So now this swing high isn't connected to the Axios dots. For some reason, when the developer was programming everything, this, for some reason, can't connect to the swings the way that it's plotting. So it needs, for the swing 5, we need 1, 2, 3, 4, 5 candles after that swing high that don't break that high to call that an official swing high. But let's add that swing indicator back in, just SW, swing, and now we can watch this line, the tip of this candle, the tip of this wick connect here with the Axios swing. See that? And then I'm going to disable Axios so we can simply look at these manual trades. Maybe we should look for, let's do it like this. Let's look for the Mean Reversion A trade. So this is taking a trade into the 9 EMA as a target. So what we need to look for is either a red arrow or a green arrow that closes the candle far away. This one kind of does. Oh, that's fine. If it's like 40 ticks minimum, I'll go for it. So Mean Reversion A trade. I'll find another example too. Oh, and by the way, the pink, these pink lines here, peachy, I guess it's peach. This is NinjaTrader's, it's an opening range indicator. I can shoot me a message on Discord and I can send you this file too. But it just looks like this. Opening range. And then from 9:30 to 9:45, it plots the swing high, swing low in the middle of the first 15 minutes of the market. I like to use these levels as targets. And you'll see what I mean here by the time the video is over. Oh, and by the way, I never do this. Please like and subscribe the video. Or subscribe to the channel. That'd be great. It really helps us out a lot. This isn't the best example, but it does work. So as we're going along here, just looking for a Mean Reversion A trade. So see how most of the, like a green arrow will close above the 9, the red arrow will close below the 9, the green arrow closes above the 9, this red arrow closes below the 9, this green arrow closes above the 9, below the 9, most of the time, I'd say 85–90% of the time, your green arrow is going to close above the 9 EMA. The 9 EMA is this dashed line here. And then most of the time, your red arrow is going to get a close below the 9 EMA. Now, setup A, mean reversion to the 9 strategy, mean 6. See how this candle? I've been paying attention to these trades for a while now. They work. So our target here, we get a red arrow, oddly enough, far away, far enough. I'm going to measure it. As this candle's forming, I'm going to have my tool out. And I'm going to be like, oh, if it were to close here, we'd about 80 ticks. And then, oh, if it were to close here, we'd have 40. Like, oh, am I going to enter this trade? If it's going to close here, we would have 100 ticks. So I'll be just actually messing around with this and just kind of seeing, is it going to be worth entering this trade? If it's more than 40 ticks, I probably can enter it. But by the time this trade closes, it's closing with this silly little freaking doji above the 9. So I'm going to enter at the close of this candle, and I'm going to target the 9 moving average as a mean reversion to the 9. So if this next candle were to go straight down, my target would be about 78 ticks. Now on the next candle, oh, it does actually. So you'll notice that you might have to, like if my target was here originally, you might have to move your target up if the moving average keeps moving up, and then you'll start to get, oh geez, now my target's only 62 ticks away, and then maybe the moving average keeps going up, and then you'll be like, oh, now it's only 47 ticks away. So that does happen, but you can also attach your order to the moving average. Let me go over a couple more of these trades real quick, and then I can show everybody how to do that as well. So let's see if we can just zoom out and find. See this red candle, or red arrow underneath the 9 moving average. Oh, here's another good one. So as this candle is forming, we get a red arrow here. I'm watching this green line start to dip down and get close to the red line. I'm like, bet you we're going to get this next candle as it's forming. You can watch it. Like, I bet you that we're going to get a red arrow on this next candle. And bam, there's the red arrow as it's forming. I'm measuring 72. It could have closed here at this 35 tick at the wick there. I might have been like, I'm not going to enter that. But it ends up closing here for 57 ticks away from the moving average. About. And then we'll see that now we have to move our target up, and it's 40 ticks. I'm getting a little nervous by this point, and then bam, we actually hit our target. So you wouldn't move your target down. You can only move it towards where your entry was. I guess if you're really fast, you could, but probably not. Anyway, that one would have been for 42 ticks. Let's find 3 examples. Let's see if we can find one more. Let's zoom out. Most of the other videos I was kind of mixing the different A, B, C, and then there's actually a D setup. Here's another one. Or here's a good example of one that I would not have taken. This one I would not have taken a mean reversion into the 9 because it's too close. 33 ticks. This one, right on the verge of me wanting to take it, 41 ticks. See what I mean? They're like kind of hard to find, especially in aftermarket. Yeah, we probably, I don't even know if there was any on this day. So here we have another day. I don't know what this is, yesterday. Oh yeah, this is a great example. We'll end this on this example. Again, we are looking at Mean Reversion A. Maybe we'll come up with a cooler name for this. So we're taking the trade into the 9 EMA as a target. Obviously, all of the entries are based on the red or green arrow. So I actually remember this trade from yesterday. Oh, this one was easy to know if it was coming or not, too. Look at that. Like, it's going to cross on the next one. So And I'm measuring right about from here to here. I'm like, oh, 100 ticks? That might be a 100 tick target. Like, I'm going to take that. Oh, also, sometimes you'll get a green arrow candle on a down bar. This bearish candle, we still put in a green arrow. It's just a testament to how cool the math is behind these Axios arrows. So we would enter here at the close of this candle, and then our target would be placed up here for 172 ticks. So we'd have our target here like this, about. And we'd have to move it down a little bit. And target. Target would have ended up at 165 ticks. Let me see if I can show you how we attach. Oh, here we go. Ah, too late. Let's see what happens with this candle. I guess it doesn't really matter. And then here's how I set my ATM up for the Axios manual trades. I'll come in here and I'll go edit. And I like to trade with 2 contracts, add 1 and 1. My stop loss, just like the automation, is 300 ticks always. And most of the time, you're going to get out on the opposite signal. You're not going to need to take a 300 tick stop loss. So we'll make the first target 100 ticks, make the second target 150, save as template, save it as Axios, or whatever. Okay, okay. And maybe this candle will pull up a little bit. Okay, and then we can sell market because we're looking at 13 ticks into the 9 EMA. And oh, let me change my. Hold on a second. I don't want to take any accidental trades here. So sell.
Order filled.
And then left click, right click on the order. On the target, attach to indicator, properties, and then we're going to attach it to the 9, and you can give it an offset of like 1 tick if you want. And now you don't even have to mess with it. And if you wanted to have the other position, do you see how I just moved it up there? Maybe you want to have the runner down here on this nearest swing, or maybe you want to put them both, attach them both to the 9. Attach the indicator, properties, and then there's a drop down here. You can attach it to whatever. Sometimes I want to attach it to the 120, or you can also attach it to the swing. So attach this to the 9, but maybe we want to make this one a 5 tick offset. I'll show you what that looks like. And okay. So this one's off tick from the EMA by 5 ticks. Oh, this is cool. This is perfect. No, they don't all work, but it seems like most of them, I'd say 80% of the time, you're going to pull back and you're going to make that. But like now you can see, this is a really cool example actually. If this candle closes and our target is over where our 9 is, then we should just get out of this trade, of course. Actually, I've never seen this happen. But that's pretty cool. And if you wanted to take 1 off, you could take 1 off here with, yes, do that.
Target filled.
And maybe you want to take them both off. Yes.
Target filled.
So that's mean reversion A. Mean reversion B. Okay, so mean reversion B. Let's see if we can find an example of that. So candle closes, I should say in. Candle closes in the direction, oh no, I guess I should say on. Candle closes on the arrow direction side, targeting the nearest swing, opening range level, or 120 EMA. So let's go back here. Let's expand this chart all the way. And we'll find one of these. I will find 3 of them. And eventually we're going to get some of these coded into the strategy. We'll have to completely redesign the strategy from the ground up. Let's see. We need more of a rangy day. I think it was yesterday. Or 2 days ago. Here we go. Oh, here we go. Perfect, perfect, perfect. Here we go. Okay, mean reversion B. Candle closes on the arrow direction side. So when I say candle closes on the arrow direction side, I should write arrow direction side of the 9 EMA. Doing it live, folks. Doing it all in real time. So this candle is our signal candle, obviously. And this candle closes on the arrow direction side. Maybe that's not the best way to explain it, but that's all I can think of right now. So the short signal is valid because we get a candle closing on the downside of the 9-period moving average. These can be really lucrative trades. So our target is somewhat discretionary though. So this is what I got to think about when I'm going to ask the developer to code this in. We can at least have them code in the entries, and then we can move our targets to wherever we want. Maybe the best way to code it in would be just to have the targets not be set targets. You could just have them, well, you can set them up as 200 ticks or something, and then we can move them wherever we want, but instead of having not automatically attached to a moving average. Anyway, so candle closes on the arrow direction side of the 9 moving average, targeting the nearest swing, the opening range level, or the 120 or 100 or whatever EMA you really want. In this case, it seems pretty obvious that I'm going to want to target the middle of the opening range for 222 ticks. What else could you have targeted? You could have targeted the 120 or 100, whatever moving average you want. 200 seems to work. The 100 seems to work. 50 can even work. For some reason, I don't know, I've been using the 120 for many, many years. It seems to divide the price action very, very much so in the middle of the price action. It's weird. Yeah. Anyway, so that is the B setup, and I don't mean A is better than B, and maybe I should just name them 1, 2, 3, or maybe we should give them pattern names or something. But mean reversion B is we need a candle closing on the directional side, the short side of the 9 moving average. We enter here and we exit at the middle of the opening range. Let's find another one of those. Oh, here's another one right here, actually. Yeah, so and at this point, it's 9, this green candle here. Let's get rid of this. I'm trying to be even more clear in this video on exactly how I'm doing this. Somebody even do some live streams or something. I don't know. Thinking about it. So this candle here is closing on the directional side of the 9 moving average. It's closing here. And what are we going to target? We're going to target the top of the opening range. Is the first available target is 122 ticks. That sounds good to me. Now, if you had 2 positions, you could also have an extended target from this swing high over here. You could target this swing high and have this. You could have 240 plus 122. 122 on one contract and 240, and then you'd be done. Obviously, there's no moving averages up here to target. You have a couple different options. You got the top of the opening range, which is the first available target, or you have the second available target, the swing. And we're not looking at a bunch of different, it's either a swing, an opening range level, or the 120, or basically whatever. I mean, you could have a 300 EMA on there and target that if you want, I guess. Whatever you want. Oh, perfect. Here's another example. Oh no, we already went over that. Went over 1, 2. Let's find one more example. That's 2 examples. Oh, here's a good one. I want to find an example where it's targeting a swing. Well, here's a tight example. This one's a little odd. So this candle here closes below the 9. Here's the 9. Closes below the 9. So that is a valid entry. Now, we could target the 120. It's real close. 44 ticks, but you know, as long as it's over 40 ticks, I'm okay with that. Or you could be more aggressive and target what? The bottom of the opening range. Now in this case, we don't quite get there. Let's clear up this stuff. We don't quite get to the bottom of the opening range. Right here we get within 13 ticks out of a possible target of 280 ticks. I don't know. Like here's what I'm thinking. In real time with this one, I remember looking at it. Our target is the bottom of the opening range. We almost hit it here. And then we come all the way back up almost to our entry here, right? And then we almost hit it here again. So frustrating. Then we come back up and then we have to get, I mean, if worst comes to worst, you'd have to get out on this green arrow here for 45 ticks. So that's funny. It ends up working out where it's the same as targeting the EMA. But anyway, or you could have just like on the second attempt here, you could have just gotten out here or gotten out here. I don't know. That's one of those discretionary calls. Let's see if we can find maybe one more. Oh, here's a good one. So here's our green candle. Call it a green candle. Actually, it would be cool if this candle was colored green. We could do that actually eventually. But here's our green arrow candle. And then it's closing above. Did not expect this video to be an hour, but that's what it's going to be. It's closing above. Now we could target 32. That's not enough. So I would force myself to target the middle of the opening range instead for 93. Because remember, you're risking 300 ticks, so you kind of want to at least have 40, 50 ticks. But again, it's going to be rare that you take that full 300 tick loss. So you could, I definitely prefer to trade with 2 contracts at least, so you can have options. So you could have one come off the table there, and if you wanted to go hardcore and you're really good at holding your positions, you could hold till this swing high, which gets hit here. Or if you want to go really crazy, you could hold all the way to the top of the opening range. The opening range is extremely, extremely powerful. The whole ORS system, our other automation, fully automated, is all based on the 15-minute opening range and the deviation levels, which you can go watch some other videos and it fully explains it. But look at the rejection at the top of the opening range there, and then look at the rejection at the middle here. And then what does it do again? It rejects again for this double top. And then it rejects again, tries to go through, but it rejects again at the middle. And then look, here's a Mean Reversion A. Anyway, so I think you see what I mean by, okay, so that was number 2, Mean Reversion B. So we've gone through Mean Reversion A, taking the trade into the 9 as a target, Mean Reversion B, candle closes on the arrow direction side, and then targeting the nearest swing, opening range level, or the larger EMA. So Mean Reversion C, candle closes on the arrow side of the 120 or the 200 EMA. So it closes on the arrow side of the larger EMA, and we're still targeting the nearest swing opening range level. There's not going to be an EMA to target in this regard. So let's find a couple examples of that. And that's going to be more on a trending day. I hesitate to even call this one a mean reversion because it's kind of not a mean reversion. These are a little harder to find. Let me pause and find one. Perfect. There was one here earlier in the week. Okay, so we're allowed to start trading somewhere between 9 and 9:30. This automation starts trading at 9. Some of the templates are better starting at 9:30. It's kind of up to you. But they're all pretty good as far as the full automation side of this goes. Okay, so Mean Reversion C. Okay, so it kind of goes with Mean Reversion B. So here's our red arrow. Let's go over a Mean Reversion B trade. We close below the 9, and then we target the 120 or the larger EMA. So that's 163 ticks. But then it keeps going. and we close below the 120 here. We're still in our sell zone based on from this candle. Give me a second here. Still in our sell zone. This, does it close below? This candle does not close below. You really got to zoom in. So it's the next candle that closes below the 120. And you can try this with a 50, you can try it with 100 or 200. They all work pretty well. So we're in our sell zone, and then we close. This gets a little tricky. This is nuanced here. So this is our entry candle here. We've already taken our first trade sequence, our B setup to the 120 here. And now we're waiting for another opportunity because it could just plummet, right? This candle then closes below the 120, and then we're allowed another entry. So we'd be entered here. We wouldn't be able to target the low of the opening range yet, though, because the opening range is not closed. Look what time it is. 9:39. So by the time 9:45, which is when our opening range closes, our opening range again is from 9:30 to 9:45, well, I guess you know what you could do is you could just get out at the close of this candle. Never thought about that till right now, actually, because our opening range is now complete, and that's officially the bottom of the opening range. Get out at 162 ticks. That's pretty cool. Never thought about that. So you could do that. Or you could turn back time. Look at where your price is. The price is here. Our entry is here. And then what are our nearest swing low opportunities? Well, we have one here. And we have one here. So either this swing low here or this swing low here, you could target either of those. And I would be looking, and I would already have these pre-marked before I even get into this trade or while I'm thinking about this trade. Well, obviously, this one, I mean, come on. Obviously, this one's too close. 20 ticks? I don't think so. So that means that you'd have to target the nearest available swing low for 200 ticks. Let's find another example. I think there might be another example today. Let's get rid of these. And man, this one just, some people were sending me messages like, dude, I got this whole freaking run. I mean, look at this with a runner, with an Axios runner. You would have had all the way to the green arrow here. 1,100 something ticks for at least the one position. And then right after that, you got a Mean Reversion A for 135 ticks. Okay, concentrate, Jake. Let's see. These are a little hard to find. I'm going to pause again and find another one. All right, cool. Here's a good one. Here's a good one. So, Mean Reversion C. This one's pretty interesting. We got our green arrow candle, if you will, and then we could target our one. Well, see, that wouldn't even be enough. 30? Nope. We gotta have to target our middle of the opening range there. Okay, but then we have a possibility of a Mean Reversion C setup. So this was B. This was the B trade. Candle closes on the arrow direction side of the 9 EMA. Target the nearest swing. In this case, we're targeting the opening range because it's over the 40 ticks. But now, this candle right here does not close above the 120. But this one does. This one closes above the 120, clearly. So now we're allowed to enter a Mean Reversion C. See what I mean? It's like almost like a trend trade. It's like kind of a mean reversion. But this one here, enter here, and then what are we going to target? Well, I can clearly see that we have a target opportunity here. Or we could trade it to, oh, this is actually, am I showing the trade that we, yeah, it's okay. I'm going to find another example. Or you could, the top of the opening range. I think this was the previous example. I don't know, I'm going a little crazy now. All right, let's see. Oh, I think there's one right here, actually. Oh, perfect. Okay, so this short. Oh, no, this is why, because I'm actually using the same trades as I used before as those examples. Yeah, these are a little dirty. Let me pause again. Okay, cool. This one's a little nuanced, but it's actually a pretty good example. Here's a mean reversion B. We close below the 9, and we target the middle of, or the top of the opening range. Or if you wanted to go crazy, you could target the 120 here. So, but the one we're explaining now is the mean reversion C. So we do close below the 120 here. But look, our target would be the middle of the opening range for only 32 ticks. But what's the next available target that we could look for that's over 40 ticks? Well, if we look back here, this swing high here, would that make it more than 40 ticks? So we could target that for oh yeah, it's like almost 75 ticks, 70 ticks. That'd be fine. And we close back above, we close back below, and then we end up hitting the target here. Oops. And we hit target here. Or, you know, if you didn't hit your target, then you would be out here minus 10 ticks at the green arrow. Let me find one more example. Oh yeah, here, this is perfect. Okay, mean reversion B, and they often come in sets like this. Mean reversion B, candle closes on the right side, on the arrow direction side of the 9 EMA. So that's here. Back this up a little bit. So that's here, and we target the nearest swing. 300 ticks, yeah, I'll probably target that. Or you could get a little bit more, you know, out of it and target the 120, or you could even get more out of it and target the bottom of the opening range. But we'll say we're just targeting the nearest swing there. But after that trade completes, you're still in your buy zone. Your buy zone all the way to here. There's a red candle. And make that green. Okay. Now, after this trade completes at this swing, now I'm looking to see if we can get in another trade on a close above this 120 or 100 or whatever you choose. That candle does not quite close above. See that? So now I'm watching the next candle. And I already know where my targets are possibly going to be. I'm either going to target the bottom of the opening range. I'm going to target this swing. I'm going to target the middle of the opening range. Okay, so this candle closes here, so I can't target this, obviously. We enter at the close of this candle because we closed above the 120. And now my target's either going to be here or here. Let's go for the middle at 158 ticks. And we hit target at the middle, right here. Or if you want to be more conservative, you could use this swing high here. F6. You could have done that. Yeah. If you had two contracts on it, you could have let one go all the way until your red arrow and gotten 600 ticks out of the one contract and 150 or so out of the first position. Okay, whew, hour-long video. I expect, oh yeah, I'll just make a 20-minute video. It's all good. But I think this was really, oh geez, no, wait, there's one more. I'm trying to get out of it. Okay, So number 4, Axios continuation. See, like number 2 and number 3 are kind of the same. Number one's basically like take the green arrow and target the 9 EMA. Number 2 and number 3 are like it closes above the 9, target the next thing. Number 3 is it closes above the 100, 120, target the next thing. Now number 4, Axios continuation, that is, let's see if I can find one of those. You know what I think? I think that we're not even going to really deal with the Axios continuation, because the more I think about it, the more that number 4 is really actually number 3. They're kind of the same thing. So let's not even worry about that right now. There's already a lot of information in this video, and I really don't think you need it. Because, yeah, number 3 really is. It's like kind of the same thing. I mean, an Axios continuation would basically be like this arrow doesn't count until, as far as the automation goes, like let's turn the automation on. Okay, so with the automation, this trade right here, because this red arrow candle did not close below the 9 and the 120, it's not going to take this trade because it didn't do it at the same time, right? So like this next candle does, so I call this a Axios continuation. So we're waiting, we're in our sell zone. We're in our sell zone at the close of this candle. But we're already below the 120, we're already below the 9. There's also another moving average we can put on here, another 20. There's a lot of stuff. But basically we're under all the stuff. But our candle hasn't actually, the red arrow candle is almost underneath everything, but we haven't quite closed below the final factor, in this case the 9. But this candle does close below. So that would be our entry short. And in this case, we would be targeting, you see, it's pretty much just a manual way of like a delayed entry. It's really just the same thing as C, as the, yeah, it really is. I think I'm getting tired. But 3 and 4 are pretty much the same thing. That's pretty cool. So we really only have 3 different types of trades. But interestingly enough, though, where would you target this? You know, like how far do we have to go back? So our entry would be right about here. So here's our next swing low. I'll be looking at targeting, oh, there's like 1 or 2, there's like a bunch of different lows here. Look at that. 1, 2, 3, almost kind of 4, bunch of lows. That's definitely going to be my target for that trade. It's basically an Axios continuation. We're just waiting for a candle to close below the 9. It's already closed below the 120. It's already closed below whatever other moving averages we are using. We're already above the super trend. Oh, let me reset the automation here real quick. And then we're almost done. And then we're also below our super trend indicator, which we use for the automation. When it comes to the manual trades, I don't care about the super trend indicator. I don't take it into consideration because a lot of times I'm thinking mean reversion. And that also goes to say that, like, that's why I don't think that number 3 is really a mean reversion. It's really just like, it's like a combo kind of a thing. I don't know. I'll update that at some point. But yeah, we'd be targeting from this candle close. That'd be about a 300 tick target there on that one. Anyway, thanks everybody for listening and hanging out. Hope everybody got something valuable out of that. Appreciate y'all. Let me just show the website again before I go. And then right now, this part of the sale that we're doing is I'll have a meeting with you to help set everything up and answer questions and basically do a little training for an hour or so. All included in the sale price. So you don't have to purchase anything separately for a one-on-one meeting. That's another thing. Most companies don't offer like one-on-one training, you know, like we do. I mean, some do. But yeah. Find me on the Discord, StratGeeks.ai. Scroll down a little bit. Smash this big red button here. Send me a message to Jake at ORS. I'll send you the fib tools if you want. No charge. Just let me know. I'll send you the opening range indicator. Yeah, hopefully the rest of the week pans out pretty good. It's been good so far. ORS has been crushing it. Fully automated, and then Axios has been crushing it when you have these manual trades in there as well. But yeah, appreciate everybody. I am going to take a little meditation, I think, before the trading starts here in Bali. It is, what time is it? 7:30? 8:30 p.m. right now, and trading starts at 10 p.m. for me. So I'm going to just chill for a little bit and yeah, have a little bit of dinner. Anyway, Jake from StratGeeks signing out. Thanks, everybody.